This is Nightly Business Report with Bill Griffith and Sue Herrera.
8 is great. Stocks power higher, leading the Dow to post its best 8-week gain since 2009.
To be continued, high-level trade talks conclude in Beijing, but they'll pick up again next week in Washington. And there's a lot at stake for American business.
Turnaround stories. Our market monitor has a list of stocks that are switching strategies and could climb as much as 20% in a year. Those stories and much more tonight on Nightly Business Report for this Friday, February 15th.
And we do bid you a good evening, everybody, and welcome. It was a TGF kind of day, especially on Wall Street, where stocks soared on continued hopes for a U.S.-China trade deal and on no government shutdown. The Dow and the NASDAQ have now turned in 8 straight weeks of gains. In fact, today's rally helped the tech-centric NASDAQ exit bear market territory, meaning it is no longer 20% below its most recent high. And actually, the enthusiasm for stocks was pretty broad-based today. The energy sector was higher on a rise in oil prices. Bank shares climbed as well, just to name 2 strong sectors. By the close, the Dow had gained 443 points. We're to 25,883 now. The NASDAQ added 45. The S&P was up 29. And small caps also saw big gains. That group, represented by the Russell 2000, is now up 10% from its most recent low. And for the week, all of the major averages had very good gains. Dominic Chu witnessed all today at the New York Stock Exchange.
Stocks roared higher, fueled by high hopes for U.S.-China trade talks that are now scheduled to take place again in Washington, D.C. next week. Both the Dow and the NASDAQ are riding impressive 8-week winning streaks for the first time since November of 2017. Also worth noting that the Dow is now less than 5% away from record highs that it hit back on October 3rd. Traders continue to talk about this as a headline-driven market, so the optimism is cautious. Trade-sensitive names were all firmly in the green, with Bowie hitting another all-time high during the trading session. Bank stocks also getting a boost from news that Warren Buffett's Berkshire Hathaway added to stakes in big names like J.P. Morgan and Bank of America during the market downturn last year. But one stock sitting out the rally, notably Apple, the lone Dow component in the red for much of the day. This comes after the latest round of filings showed Berkshire Hathaway trimmed its Apple holdings by about 1%, or roughly 3 million shares. The stock market will be closed on Monday for President's Day and will reopen for regular trading on Tuesday. For Nightly Business Report, I'm Dominic Chu at the New York Stock Exchange.
So will we see a continuation of this rally when the market does reopen next week? Joining us to talk about that is Joe Duran, CEO and founding partner of United Capital. Good to see you again, Joe. Welcome back.
Hi, Sue. How are you?
We're good. The question is, how good is this market? You are still bullish.
Yeah, it's hard to not feel like it's doing quite well. You know, I think last year at the end of the year we had an immense overreaction to light trading volume, the sellers overwhelming the market, right? Especially that week before the Christmas holidays, and we've now recovered all of that December weakness in the small caps and across the board, really. We're also seeing much stronger international markets, which is encouraging as well. So a lot to feel good about. The Fed is clearly now a friend again and not a foe. And it looks like even if we don't get to resolution with China, there's clearly enough momentum to extend the expansion of tariffs that would have kicked in a week. And so there's very little to be concerned about. Global growth still a bit of a concern, but it looks pretty good to us.
But global growth is a bit of a concern. And just in the last week or so, we've been hearing anecdotal stories from various companies who are affected by the global growth story. And I think of a Coca-Cola and Pepsi, which both said profits are going to be very hard to come by this year. Hasbro and Mattel guiding lower for this year. Apple finding a slowdown, especially in China. I mean, those are just 5 companies, but they're very important in the consumer sector, and they're talking slowdown right now.
Yeah, they have to, of course, because it is slowing down, and the interest rates reflect that. You know, you see interest rates remarkably low given the recovery we've had, and that's really because Germany has basically gone through a recession. I think they're 0.3% away from calling it a recession. China definitely slowed down.
Well, why doesn't that affect our market then, Joe? Why won't that have an impact on the U.S. stock market then, do you think?
Well, because what you're seeing is these low interest rates eventually create more stimulus around the world, and the U.S. is buttressing the slowdown in the rest of the world. And I think what you're seeing the stock market reflect is that if China tariffs get resolved, if the rest of the world can start turning the corner and the U.S. leads it, small caps are telling you the U.S. is in great shape and not a lot to be concerned about. And again, while it doesn't mean that it's not going to be bumpy, there's a lot to be relatively optimistic about, especially if the emerging markets continue to do well. And all it takes is really for the dollar to be stable, which it was running a lot up last year, and that's stabilized a little as well.
Joe, thank you. Joe Duran with United Capital.
Now to the trade talks that have been the focus of investors all week. The president today said that he wants a deal that's good for both the U.S. and China, and he added that he still plans to meet with China's President Xi at some point. He made those comments after 2 days of high-level negotiations in Beijing that wrapped up. And that's where we find Eunice Yoon again tonight.
Treasury Secretary Steven Mnuchin and Trade Representative Robert Lighthizer are on their way back to the United States after their 2 days of talks here in Beijing. The two capped off their visit with a meeting with President Xi Jinping. According to state media, President Xi said that the trade negotiations would continue in Washington next week and that the two sides had made important step-by-step progress. Secretary Mnuchin had also tweeted out that the conversations here were productive. The two sides were reportedly focusing on hammering out a memorandum of understanding that could act as a framework for a meeting between Presidents Trump and Xi as early as next month. But before anyone gets too excited, the back chatter is that the two sides are still at a stalemate. The Chinese are more focused on narrowing the trade gap with bigger purchases of American goods, such as chips, but there's been little progress in some of the thornier structural issues, such as state subsidies. President Xi flagged the challenge himself, saying via the state media that China is willing to adopt a cooperative approach to resolve and promote an agreement acceptable to both sides. However, cooperation requires certain principles. That line is being interpreted that China has its own bottom line. For Nightly Business Report, I'm Eunice Yoon in Beijing.
The cost of imported goods into the U.S. fell in January for the third straight month. The import price index slid 0.5% last month after even steeper slides in December and November. Lower oil prices played a role, as did the price of some consumer and industrial goods. Economists say that report is more evidence of waning inflation pressures within the economy.
Meanwhile, industrial production fell in January for the first time in 8 months. According to the latest report from the Federal Reserve, a large part of that decline was the result of a decline in production of autos and auto parts. Economists say that dip suggests factory activity in the U.S. is starting to cool.
A partial government shutdown has been averted. The president this afternoon signed the spending bill into law that Congress passed yesterday. But the president also declared a national emergency at the border as a way to secure the funding that he wants for a wall. Eamon Javers is at the White House tonight.
The White House says that as a result of today's action, there's going to be about $8 billion in spending on a border wall at some point in the future. Here's how the numbers break down. Starting with yesterday's spending bill that was passed in both the House and the Senate, that's $1.37 billion from congressional appropriations. The White House is also going to tap into $600 million from Treasury's drug forfeiture fund and an additional $2.5 billion from the Department of Defense's drug interdiction program. $3.6 billion, that's the chunk of money that the president has access to as a result of this national emergency declaration. That comes from the Department of Defense's military construction budget. So the president would like to get this spending going as soon as possible, given that he says there is an emergency at the southern border, but he also acknowledges there could be legal action ahead.
I'll sign the final papers as soon as I get into the Oval Office, and we will have a national emergency, and we will then be sued, and they will sue us in the Ninth Circuit, even though it shouldn't be there, and we will possibly get a bad ruling, and then we'll get another bad ruling, and then we'll end up in the Supreme Court, and hopefully we'll get a fair shake, and we'll win in the Supreme Court.
The president there predicting a long legal battle ahead, and Democrats seizing on one of the comments that the president made in the Rose Garden, in which they say he suggested that this isn't an emergency at all.
I could do the wall over a longer period of time. I didn't need to do this, but I'd rather do it much faster. And I don't have to do it for the election. I've already done a lot of wall for the election, 2020. And the only reason we're up here talking about this is because of the election. Because they want to try and win an election, which it looks like they're not going to be able to do.
Democrats arguing that by saying I didn't need to do this, the president is in essence admitting that there's not really a national emergency at the southern border. The president making the case, though, that this is absolutely necessary. And the one thing that both sides seem to agree on is that there will be legal action going forward. Democrats in a joint statement today called this an unlawful power grab by a disappointed president. For Nightly Business Report, I'm Eamon Javers at the White House.
Time to take a look at some of today's upgrades and downgrades. In fact, they're all downgrades tonight. Dow component Coke was downgraded to neutral from buy at Citi. The analyst cited the weak guidance that company issued this week and also the continued currency headwinds they face. Price target now $50 a share. That stock fell a fraction to $45.24. General Dynamics was cut to neutral from outperform at Credit Suisse. The analyst cited increasing competitive threats in both aerospace and IT, which hurts the outlook for growth for that company. Price target $184. The stock rose more than 1.5% today, though, to $175.24. And AIG was cut to hold from buy at Argus Research. The analyst cited AIG's higher than normal catastrophe losses. The firm also points to consistent underperformance lately. Shares rose more than 5%, though, today to $42.32.
Still ahead, regulators are ramping up pressure on some of the nation's biggest tech companies.
Credit rating agency Moody's said today that Amazon's decision not to build a second headquarters in New York City is a negative for the city. Moody's says that while New York's economic fundamentals do remain strong, other firms seeking government incentives may no longer now consider the Big Apple as a good place to locate their business.
Regulators are reportedly close to hitting Facebook with a record fine over the way it handles user data. And this comes as Silicon Valley more generally faces increased scrutiny from lawmakers over privacy violations. Julia Borston takes a closer look.
The Federal Trade Commission and Facebook are negotiating what would be the agency's largest ever fine in the billions of dollars. This according to the Washington Post. In March, the FTC began probing Facebook after the Cambridge Analytica scandal, which revealed 87 million users' data was inappropriately shared. In focus, Facebook's 2011 settlement with the FTC on charges that it deceived consumers. Violating its commitment to protect data could draw fines of up to $41,000 per user.
This company has, well over $40 billion in cash. So to pay a $3, $4, $5 billion fine, I don't think would be an issue for the company fundamentally, or for the stock, frankly.
But this comes as the Government Accountability Office recommends the passage of a federal internet privacy law and issued a report that found that over the last 10 years, most of the FTC's actions against companies for data privacy abuses did not include fines. Facebook issuing a statement saying it's cooperating with officials in the U.S., UK, and beyond. But this comes amid growing calls to regulate the tech giants.
We need to put some digital rules of the road into law when it comes to people's privacy.
Senator Amy Klobuchar is making regulating data privacy a centerpiece of her presidential run. She's among the 15 Democratic senators who introduced the Data Privacy Act in November. Meanwhile, in California, Governor Gavin Newsom this week introducing an unheard-of proposal that could have big implications for tech companies' bottom lines.
So I've asked my team to develop a proposal for a new data dividend for Californians, because we recognize your data has value and it belongs to you.
With so much potential regulation, analyst Mark Mahaney says Facebook's investment to protect consumers and prepare for regulation is weighing on returns.
All across the board, this business is less profitable than it was 2 years ago. I don't think it'll regain those profit levels that it had in the past.
Calls to protect consumer privacy reach across the aisle. Senator Marco Rubio introducing the American Data Dissemination Act last month. While we await details from the FTC's investigation, some analysts warn government regulation and possible censorship of site content could become more burdensome in coming years. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Well, it wasn't exactly a fun Friday for shares of Mattel, and that's where we begin tonight's market focus. The toy maker says that sales this year are going to be flat and gross sales for the first quarter are going to decline. Just last week, Mattel posted a surprise fourth quarter profit on strong demand for its Barbie dolls, and the stock took off. But that strength is now being overshadowed by weakness in its Thomas the Train and American Girl franchises. And Mattel shares today plunged 18% to $13.82. Meanwhile, Pepsi says that its future growth is going to come at a cost. The company said today it expects profits to decline as it increases investment in some of its key businesses. Pepsi reported earnings that were in line with expectations, and the chief financial officer says the company is focused on what consumers want.
We're going to go where the consumer wants to go because we know there's natural tailwinds in consumption of the types of products that we create and we brand and we distribute. We have all these great capabilities. We know we're on trend with consumers. So if consumers are moving to sparkling, we're going to do that, whether it's in a can like bubbly or whether it's make it home like our SodaStream business. So we do see a ton of opportunity out there in beverages.
Shares rose about 3% today to $115.91. And Deere's earnings missed estimates, but revenue beat forecasts as the world's largest tractor maker was hurt by slowing trade with China and by higher raw materials costs. Deere's reaffirmed its full-year guidance as it sees equipment sales growing and optimism that a trade deal with China can be reached. Shares fell, though, more than 2% today to $158.99.
Household products maker Newell Brands was hit by higher costs and sluggish sales of its Graco baby products following Toys R Us going bankrupt. The company did manage to beat earnings estimates, but it missed on revenue. The maker of Sharpie and Elmer's also issued a downbeat outlook for the year, and that sent shares lower, down nearly 21% to $17.16. Electronic Arts is reportedly in talks with the Chinese video game company Tencent to bring EA's new hit game Apex Legends to China. Tencent already distributes 2 other similar games in China, including the runaway hit Fortnite. Apex Legends reached 25 million players earlier this week. EA shares rose 1.5% to $106.84. The cannabis company Canopy Growth said revenue surged nearly 300% in its first quarter since Canada legalized recreational marijuana in October, and that sent the shares 3% higher to $47.56. XPO Logistics reported disappointing earnings last night, but it was what the CEO said on the analyst conference call this morning that investors focused on. The company said its biggest customer, which is believed to be Amazon, cut back on business with XPO by 2/3. XPO says the reduction could lead to a decline in 2019 revenue. As we've reported, Amazon is building out its own network of distribution and delivery centers. XPO shares were off nearly 13% to $51.97. FedEx and UPS were also lower.
Now to our weekly market monitor. He likes companies that he says are transforming their businesses into faster growing entities. And he says names that he likes can grow between 15 and 20% over the next 12 months. This is his first time with us as a market monitor. David Yepez is portfolio manager with Exxonmobil Wealth Management. David, good to see you again. Welcome back.
Thank you. Thank you for having me.
These turnarounds, let's talk first about Baxter, the hospital products company. They've had a rough couple of years in the stock market. A new CEO, though, but you think he can turn things around, yes?
Yeah. So he was, if you remember back a few years ago, he was the CEO of Covidien. He turned around that company and Medtronic bought Covidien at a high premium. So now he's coming to Baxter. He's doing the same changes, changing the management team, transforming the business, innovating. And so we think, Baxter right now is the leading company in home dialysis and many products on the ICU. For hospitals. So we think it can go 15-20% from here.
Next on the list is Oracle, which made some news late this afternoon by upping its share repurchase program. You like it because you think it's kind of been, left behind, but there are basically some big initiatives at this company that you think will allow it to continue to grow.
Right, that's correct. So they have been the underdog company for many years, and now they're innovating in the cloud. They have an autonomous database that is really fast, really secure. We think now they have an opportunity to transition all their clients to the cloud, kind of like similar to the Microsoft story. And so now in the application business, this is back office solutions for cloud. They're doing lots of things on finance, HR. And so when you take those things together, we think they can grow and the stock can do very well in the next 12 months.
And your third pick this week, people may not often think of it as a turnaround, but it's Exxonmobil. And I was looking at a chart today. I was surprised that it's been 5 years since this company hit an all-time high. It's been trending lower since that time. Obviously, CEO Darren Woods has his hands full. What do you think he has to do to turn things around?
Yeah, so he's turning around the upstream business. That's the part where they have been lagging. Now they're doing lots of investments in many areas around the world. And so we think they're doing lots of innovation. They're lowering the cost of production. And so we like it here. They have great opportunities. And while you wait, you get a 4.5% dividend yield. So we think they have very good chance to going higher from here.
Well, we will see how they do from here. David, again, thanks for joining us. David Yepez is with Exennial Wealth Advisors. Have a good weekend.
Thank you.
Coming up, riding the wave, but the boating industry faces some choppy waters.
Here's a look at what we're watching next week. It's a shortened week because of the holiday. Tuesday, Walmart reports earnings, something that takes on greater significance following yesterday's sharp decline in retail sales. Wednesday, we'll get a peek into the Fed's thinking with the release of the minutes of its most recent meeting. And then on Friday, a number of Fed officials will be speaking about the economy. And that's what we're watching next week.
Eddie Lampert will step down as chairman of Sears. The decision follows Lampert and his hedge fund winning control of the retailer in a bankruptcy court. But Lampert will remain chairman of Transform Holdco, which now controls all of the assets of Sears Holdings. Lampert says that his resignation from Sears is not the result of any disagreement with the company's board or its operations.
The commercial shipping and trucking industries give us a good sense of how the economy is doing, and recreational boat sales do too. They are considered a leading economic indicator because they are purchased with discretionary income, which is very sensitive economically. The health of the economy is usually the focus of the major international boat show in Miami. But this year, as Frank Holland reports, it took on a different tone with a focus on trade and tariffs.
A new wave of boats on display at the Progressive Miami International Boat Show.
This boat is an incredibly versatile boat.
It's the biggest in the U.S. and a bigger deal this year. Many boat makers are hoping that domestic sales at shows like this one in Miami, where they generally make about 50% of their annual revenue, will make up for the international sales they are not making due to retaliatory tariffs.
It has had an effect on my business. 30% plus of our business was overseas shipments to Canada, Mexico, EU, China. And since the tariffs were enacted, it's essentially dropped to nothing.
So what room are we in right now?
We're in the salon.
Rob Parmentier is the president of Marquis Yachts. With a strong showing in Miami and the strong economy, Parmentier believes domestic sales could exceed the 4% growth forecasted this year, but says that still will not be enough.
We've been able to subsidize some of it with the American growth. But the American economy is not growing fast enough to suck all of that loss. And so what will happen eventually over time, we'll be forced to lay off some of our workforce.
About 3/4 of U.S. boat exports are sold to the EU, Canada, Mexico, and China. Their retaliatory tariffs are in response to the 232 tariffs on steel and aluminum enacted by the Trump administration last year. Brunswick Boats, the nation's largest publicly traded boat maker and owner of the Mercury and Boston Whaler brands, expects the tariffs to reduce their 2019 pre-tax earnings by as much as $22 million. That's about 6% of the same number last year.
If these retaliatory tariffs continue, as long as the domestic market remains strong and is growing, we'll weather it. But if we hit a bump in the road, it will mean layoffs.
Looking for new sources of growth, many boat makers are trying to attract millennials. Right now, the average boat owner is 58 years old.
Millennials loving this kind of boat.
Joan Maxwell, the president of Regulators, says reversing that trend is her top priority. Here in Miami, Regulator is debuting this new crossover.
It's just like our phone, so we can touch anything we want to do here and run the boat.
It's a multi-purpose boat where people can fish, water ski, or just cruise.
Lean back, enjoy yourself, Frank.
It's also about 32% less expensive than their average model.
This will bring us more buyers. So it's a longer-term view. The short-term view is sell everything you've got at the highest margins that you can, but this is a longer-term view.
For Nightly Business Report, I'm Frank Holland in Miami.
Before we go, here's a look at the final numbers from Wall Street. The Dow gained 443 points. The Nasdaq added 45. The S&P 500 was up 29. And for the week, all the major averages posted solid gains. The Dow and the Nasdaq were up, as we said, for 8 straight weeks.
But we're at a point now where the brokerage houses are starting to disagree on the future of the stock market. Goldman Sachs is tentative in seeing future growth for the stock market, and at least in the short term, while J.P. Morgan sees this rally continuing into the springtime. So we'll see how things go. We have all the retail earnings coming up next week, so that should be interesting.
And that's what makes a market, right?
Yes, it is.
That'll do it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great weekend. We'll see you again on Monday. It's President's Day. We have a special edition of Nightly Business Report then. We'll see you then.